a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about housing ETFs. And housing is one of the very few red hot areas of 2020 that has remained strong in 2021 as well. We know that many high-flying stocks, technology sector in particular, they have come down this year, whereas cyclical stocks have been doing better. But both the housing ETFs that we are discussing today, they did very well in 2020, and they are up more than 25% this year, whereas the S&P 500 is up less than 8%. Now, we know that housing did very well last year, and it continues to do well because of the record low mortgage rates and also this trend of migration to suburbs, particularly by younger people because of the work from home trend. Now, the sales of existing and new homes, they came down slightly in February compared to January, but economists say that it was mostly due to weather-related factors, particularly winter storms in Texas and some other areas. And once the spring selling season picks up and vaccinations continue, then many more sellers who were hesitant to put their houses on the market due to COVID, they may come back into the market, and more buyers may also come into the market. So the housing market is expected to remain strong as the economy reopens. And also this work from home trend is likely to continue going forward too, as many companies have already announced about flexible work from home, flexible working trends. And while mortgage rates have been rising a bit lately, they are still at record low levels. Now, whether housing can remain strong going forward later in this year, it really depends on the rates, as I mentioned. But most economists believe that mortgage rates will continue to be at low levels because of the Fed's support. And another reason for concern is rising materials prices. We know that lumber prices in particular have been soaring of late, so that may affect housing prices. And rising home prices, if home prices continue to surge, that may also affect the housing market. But at the same time, housing is nowhere near bubble levels because we have seen a lot of real buying demand, unlike in 2007, 2006, when there was a lot of speculation in the market. And buyers who are buying now, they are mostly in well-paying jobs, and they are putting a lot of cash upfront. And mortgage standards have also gone up since the financial crisis. Banks are now lending only to qualified buyers. So that is why housing doesn't seem to be near speculative or bubblicious levels. Now, let's take a look at the two housing ETFs. And I also wanted to show you another tool on our website that is related to best industries. So as I mentioned, I wanted to show you the sector and industry ranks on Zacks, which are very useful tool. So if you go to stocks, and then you can go to industry rank or sector rank, and you will see that construction is in fact number one sector as of now. And that is why housing related stocks are so strong. And within construction, you will see that building products, home builders, all these areas are doing very well. And these ranks are based on earnings estimates, analyst earnings estimates. That's how we arrive at ranks for stocks, and those are aggregated to arrive at ranks for sectors and industries. Now, within these sectors and industries, there are two ETFs that you can use, and The first one I want to talk about is by iShares. It is the iShares US Home Construction ETF, ticker symbol ITB. It holds home construction and related stocks, and it is market cap weighted, so a lot of exposure to heavyweights in the home construction industry. 42 basis points in expense ratio and has an AUM of $2.4 billion. To learn more about this ETF, you can go to the quote page. You can read our articles, reports, and from there you can go to the external home page, iShares web page for this ETF, and you will see DR Horton, Lennar, NVR, Pulte Group. These are the top holdings, then Home Depot, and you will see that a lot of exposure to these four. In fact, almost 40%, more than 40%, 45% is in these four stocks. Now, looking at the industries, you will see that home building is about 65%, building products 13%, and then home improvement. Now, home improvement stocks like Home Depot, Restoration Hardware, RH, Lowe's, they have been benefiting because when people spend a lot of time at home, they also want to improve their homes, and that is another trend which is expected to continue. And if home improvement stocks do better, then this ETF may outperform. So this is the SPDR S&P Home Builders ETF, ticker symbol XHB. This holds companies in the home building segment, and it selects its holdings by their market cap and then equal weights them. So not a lot of exposure to top players, more diversified exposure. There is also cheaper, 35 basis points expense ratio, and has $1.5 billion in assets. Again, to learn more about this ETF, you can go to the quote page on Zacks.com, and from there the external home page. Now, looking at the top holdings, you will see a lot of exposure to home improvement companies, then to home builders. You will see building products is the top industry in the ETF, then home building, then home improvement retail, home furnishing retail, appliances, etc. And looking at the holdings, you will see Williams-Sonoma, Restoration Hardware, the stock which has been soaring over the past year as more people in the luxury segment, they are buying a lot of improvement for their budget. They are making a lot of purchases for home improvements. Then Lennar, Lowe's, DR Horton, Home Depot, and Pulte Group. These are the holdings in this ETF. So this has more exposure away from home builders. Now, on the last slide, I have the comparative performance versus the S&P 500 over the past 1 year. You will see that the equal weighted ETF XHB has been the best performer. This is up about almost 135% over the past year. The home construction ETF ITB is also up about 125%, and the S&P 500 index is up about 60%. And these numbers look a little bit better because we are starting from March lows, but still both these ETFs have done very well compared to the broader market, and they continue to do well this year as well. Thanks for watching, and in full disclosure, I hold XHB in the ETF investor portfolio that I manage. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss any episode, and I'll see you next week.